Welcome to the Daily Market Recap. Today is Thursday, July 2, 2026. Wall Street wrapped up today's session firmly in the green, with equities staging a powerful rally across the board. The primary driver behind this bullish momentum was the highly anticipated June employment data, which signaled a cooling U.S. labor market. Investors enthusiastically cheered the softer than expected payroll figures as they directly alleviate pressure on the Federal Reserve to implement further monetary tightening. This data created a perfect risk-on environment, allowing buyers to fully control the narrative right into the closing bell. Looking under the hood at today's sector performance, market participation expanded beautifully beyond the mega-cap tech giants. Defensive sectors like healthcare and consumer staples found a solid footing as Treasury yields pulled back, while the materials sector led the daily leaderboard. Conversely, the high-flying semiconductor and artificial intelligence spaces experienced a healthy dose of profit-taking and consolidation, highlighting a constructive rotation into value areas. To gauge the psychological landscape of the market, our Greed and Fear Index is currently printing at 31. This places overall market sentiment firmly in the fear zone. Even with today's relief rally, market participants remain deeply anxious about trailing macroeconomic metrics and the lingering impacts of tight financial conditions. However, for savvy contrarian traders, this prolonged period of fear can often signal that a near-term market bottom is actively forming. The top news story shaking up the tape today is the June non-farm payrolls print, which came in noticeably softer than Wall Street expected. The economy added a modest 115,000 jobs, a sharp deceleration from the previous month's expansion, while the unemployment rate stayed pinned at 4.3%. This cooler reading is exactly what equity markets wanted to see, as it strongly reinforces the narrative that economic growth is moderating enough to allow the central bank to transition toward a more supportive monetary policy framework. Our second major story features a significant geopolitical breakthrough that sent shockwaves through the commodities pits. Optimism surrounding sudden progress in U.S.-Iran diplomatic talks has paved the way for a potential fully-fledged reopening of the crucial Strait of Hormuz shipping lane. Because this vital channel carries roughly 20% of global oil supply. The easing tensions triggered a massive drop in West Texas intermediate crude prices back toward the $70 range, alleviating a huge structural inflation concern for the global economy. Rounding out our top news items, newly appointed Federal Reserve Chair Kevin Warsh delivered a notably constructive speech at the ECB forum, explicitly stating that domestic and global inflation risks have meaningfully eased. Given his historically hawkish posture, these remarks caught macro traders by surprise, shifting the projected interest rate trajectory and providing a solid layer of fundamental support for both the bond and stock markets. Now let's switch gears to the individual names lighting up the dashboard today. While the broader indices steadily drifted higher, specific corporate announcements, earnings beats, and aggressive sector rotations triggered explosive double-digit velocity in both directions across the tape. Leading our top gainers today is SLBT, catching an absolute monster wave of institutional buying volume. Right behind it is Genuine Parts Company, ticker GPC, which vaulted higher after delivering an impressive quarterly earnings beat backed by robust margins. Rental giant Avis Budget Group, ticker CAR, also accelerated rapidly as falling energy costs and robust summer travel booking projections energized buyers. Finally, biotechnology leader Moderna, ticker mRNA, locked in substantial gains following successful clinical trial results and key drug pipeline validation. On the bearish side of the ledger, we saw severe distribution hitting several prominent names. Regulus Therapeutics, ticker RGC, plummeted as speculative capital rapidly fled the micro-cap biotech sector. The hardware and semiconductor equipment spaces also took a severe beating, with Vickr Corporation, ticker Vickr, and Veeco Instruments, ticker Veeco, both tumbling after issuing cautious forward-looking capital expenditure guidance. Lastly, lidar developer Ouster, ticker OUST, experienced a heavy round of selling as commercial autonomous technology timelines face near-term rollout friction. Turning our attention to the charts for the S&P 500 equivalent ETF, ticker SPY, the technical posture remains firmly intact. SPY successfully defended its immediate structural support level down at $743 during intraday drawdowns. Looking to the upside, the bulls face clear overhead resistance at the $753 level. A decisive high-volume close above $753 is required to invalidate the recent consolidation phase and pave the way for a fresh leg toward all-time highs. For the tech-heavy NASDAQ 100 tracking ETF, ticker QQQ, the price action is showing an incredibly important stabilization pattern. QQQ managed to hold its key foundational support base at $450, even amid ongoing profit-taking across big tech. To reclaim full bullish momentum, the buyers must forcefully clear the immediate horizontal resistance level, sitting at $465, which would reignite a broad-based growth rally. Looking at the small cap landscape through the Russell 2000 ETF, ticker IWM, we are seeing excellent relative strength as capital rotates out of larger clusters. IWM has built a robust near-term support shelf right at $215, confirming solid accumulation. The next major technical hurdle for the small cap bulls rests at $224 of resistance, and a breakout here could unleash a powerful short squeeze. In the digital asset arena, Bitcoin is showing fantastic technical resilience. BTC successfully cleared the major $62,000 resistance zone, putting an end to the heavy selling pressure observed throughout last month. On-chain analytics indicate that institutional whales have been aggressively accumulating spot supply, creating a strong floor moving forward. BTC has established firm support at $61,000, with the next primary upside resistance target resting at $63,500. Ethereum is following Bitcoin's lead beautifully, displaying a highly constructive market structure. ETH has successfully reclaimed the critical $3,400 psychological baseline, transforming it into a reliable near-term support zone, backed by steady network activity and rising transactional demand. The next critical overhead resistance barrier for Ethereum sits at $3,550, which could open the gates to higher local targets. Taking a broader look at the altcoin market, performance remains highly selective and fragmented. While a handful of major Layer 1 and prominent decentralized finance protocols are enjoying strong double-digit gains alongside Bitcoin's recovery, aggregate altcoin liquidity is still tightly constrained. Most participants are keeping risk parameters tight, waiting for Bitcoin to firmly cement its macro trend before aggressively chasing micro-cap assets down the risk curve. Wrapping up today's analysis, near-term market sentiment is leaning cautiously optimistic as cooling macro indicators and lower crude prices ease stagflation fears. However, remember that trading volumes will likely thin out significantly due to the observed Independence Day holiday, which could amplify localized volatility. Keep a close eye on any weekend geopolitical developments from the Middle East and early previews of the upcoming corporate earnings season, as these variables will completely dictate the market's trajectory over the coming weeks. If you found value in this comprehensive market breakdown, please remember to hit that like button and subscribe to the channel to never miss a daily update.